Hello and welcome back to another video. My name is Justin and today the bulls are celebrating because we had one of the biggest gains in about the last 2 years. We can note that it is a broad-based rally with breadth and depth, and we can thank Mr. Jerome Powell for the move today. In a moment, we're going to talk about exactly what drove the S&P, but what I want to do at a high level first is look at what actually happened in reaction. So we can see here that it is broad-based. We see Tesla up by 4.6, Apple up by 4. Those are our leaders. We got Google up by nearly 4, Microsoft up by 3, and basically every single sector is higher. Everything's up. So the second thing I want to talk about here is just that the bulls actually managed to score a touchdown. So a touchdown for me means that we went from center field actually down to support 2, roughly 405.02 was the low of the week, and then we advanced in dramatic fashion by 20 points from 405 all the way here to 425 and beyond. So what this means is that the bulls have now scored that touchdown, and again, congratulations to the bulls. This is definitely relief. If it's going to turn into more, we will find that out a little bit later. Last thing to look at before we look at the Fed comments is just that QQQ actually also exited bear market territory by getting back above 327. We're closing out today at 329.6. So we are now no longer 20% off the highs. We are like only off by about 18%. So this is very important because it means that if we're, let's actually double check the numbers here because we're sitting here at about 19.2% off the highs. So it's not quite 20, but it's awfully close. And then for me to confirm the move, what I would really like to see is for the S&P to also exit correction territory. And for us, that would be 10% off the highs, which is going to be us getting back above 432. That number is also very important because I don't have it up, but there was a 425, 430 call spread being bought for Friday, and the 430 calls were priced at about $2 to $3, which would imply break even would be above the 432 area, and we would be out of negative 10%. So that is what I'm noticing. We'll circle back and talk about the charts a little bit more because we are seeing a lot of similarities to the last FOMC meeting. But before we go further, what I want to look at is just going to be what actually happened. So we can note that the Federal Reserve changed the fund rates. Again, they increased by 0.5%. So the range is now 0.75 to 1%. It was a 10 to 1 vote. And we're also going to be getting balance sheet runoff that's going to begin on June 1st. That's the big one. Second thing here is just that the U.S. rate futures priced in more than 200 basis points of additional Fed hikes tightening in 2022, imply Fed funds rate of 2.9 this year. So I want to talk about the last one, then I'll circle back here. Last one. Interest rates futures suggest 94% probability of effective Fed funds rate at least 2.75 by the end of the year. Interest rate futures suggest 35% probability of Fed funds rate of 3 to 3.25 at the end of the year versus 52 before the FOMC meeting. So this was one of the positive comments that was highlighted here. And then the second one was that Jerome said that the 25 basis point hike is off the table. So if we think about that, right, the big thing to move the market, I'm talking the big move that we saw here on a short-term time frame, was right here. So right when the press conference started, almost to the minute when Jerome said that the committee is currently not considering a 75 basis point hike. That is when we saw that maybe we are pricing in peak hawkishness because that 75 basis point hike is now no longer in play for the next meeting. So we definitely saw some repricing happening with the dollar going down, and we're seeing that bonds are also down, VIX is down, and the market had an incredible snapback. Cannot deny how impressive this is. What I would caveat this with, though, is that where we're going to be by the end of the year has not changed. So we saw relief that we're not doing 75 at the next meeting, but we're going to be 94% chance we're going to be at least 2.75 by the end of the year. And they're implying more than 200 basis points, and they're implying that we're going to be at 2.9. So why does this matter? Well, Jerome said that for the next couple of meetings, so that would imply June and July, that 50 is in play. So if today we saw, again, so far in March we saw 0.25, in May we saw 0.5, so now we're at 0.75 total. Now we're going to be getting 50-50 and then TBD. How many meetings are left between now and end of the year, though? 1, 2, 3, 4, 5. So if we're going to get to 2.9%, and right now we have about 0.75 baked in, what does that mean? Well, we're going to need to have an additional 2% added on. And we only have 1, 2, 3, 4, 5 meetings. So this pretty much means that every single meeting between June and December, we're going to be raising by 50 basis points excluding one. So maybe end of the year. So what we saw today is going to be repeated, again, if what's implied is correct, in June, July, September, November, and then maybe in December, we dial it back to only being 0.25 or maybe even 0. So I think that right now what Jerome is doing is trying to use his words because his words are powerful, and he's trying to guide the market to do a lot of the work for him. We can note that by, again, just what happened with DXY today. So looking at DXY, we can note that it's a pretty nice haircut here, right? Finally, right? The stupid strong dollar. Nice drop here. We're down by nearly 1% on the day, back down to 102.4, just below 102.5. For me to say there's confirmation here, I would love to see the dollar back below 100. Over 100 gets me a little bit apprehensive. And when I go back and look at the broader market here, what I think is happening here is relief. I'm not sure that this is actually going to be the reversal, but again, cannot discount just how powerful these bulls were today. There's breadth, there's depth, and I think a lot of people were caught on the wrong side of the trade today, where again, you sell the rumor, buy the news. So we look back to the last meeting we had a March 15-16 meeting. We're going to compare that period to May 3 and 4. Let's have a look now. So May 15-16, there's day 1 of the FOMC. There is day 2. So what happened, right? We have, right, the slide down into the event, right? We start to move higher on Tuesday. On Wednesday, we start higher. And then we squeezed up from peak to trough, again, from the relative low just before the meeting to where we were. It was about 10%. We're also starting off from nearly that same base this time, right? Oh, wow, it's almost exactly the same. If we, from Tuesday, if we go down to the low from Monday, and we now go up by roughly 10.5%, where do we land? The 200 DMA, yep. So what looks similar to me here is that the formation looks the same, where we get multiple cuts down. We start the strong reversal, close at the high of the day. We got the death cross here. We got to test the 50 first, 200 next. Same thing here. We got the 50 here at 436, the 200 at 448. We're making good progress, and that's what I would say it is so far. It's progress. Elevated volume as we're closing the day out, but it's kind of meh. For the percent move that we had at 3%, I would have loved to have seen right, a bigger green bar than these red ones, right? Would have liked to have seen 150 million in shares. It's not that this is bad. Volume just confirms the move. So without the volume to really push us higher, it came in the last 2 hours. So we're going to have to see a lot of follow through into the open tomorrow for me to say that this is not just people unwinding their short trades and, again, relief. So going back to where we are now, that's what I think could happen. What's really important as well, I think I closed it out now, but the key levels for me were after we get above 425, which we did, let's think about where we came from. So on the hourly chart, we're still trending down. We are forming a short-term uptrend with, again, powerful volume on the hourly here, but we're still technically pointing down. If this is a basing pattern, we cannot fall back below this IHS neck at about 415. That's also a very important level when we look at the weekly and monthly. So for us to break, we got to get above that 432. And as a reminder, 432 is where we are at that correction territory. So the hourly chart is going to be the first one for us to break bullish and confirm that we're actually going to go higher if this is the true move. So looking here, again, 432 into early tomorrow and by the close means that we stopped going down on the hourly time frame. And then what? We can go sideways to up. 2 candles is a very nice preview, but it is not confirmation. Looking at the daily chart now, we can note that 422, once we got over that area, the squeeze really started. So again, zooming in here to the hourly chart, right? Close 1 hour above it and then continuation. that 422 is so important because it goes back to our lows that were set in January at 420.76 and the low that we put in July of 2021 at 421.97. So we got back above the green line. We're back over the white line, which is now going to be an all-time high connect. So all-time high just before the lockdown drop, right? There's the connection. We finally got back above it. So we are technically trending up versus 2020 by holding this area at about roughly 428. 428 is also important on higher time frames. Let's look at our weekly chart now. Weekly chart, so we stopped going down versus our start of the year, but versus our relative high here, we have to get back above the 50 weekly to really confirm it. I'm not sure if this is a trap or not, right? Elevated volume, it's only Wednesday, so we got strong weekly volume so far. Almost a push off the green line. They're within $5, 405.02 is the low. For me to say that this is now true, I would like to see this previous candle engulfed. Last week's high, 429.64. This week's high, 429.66. So it's technically engulfed. All we got to do is close above it now, roughly $1 higher. So again, congratulations to the bulls. And there we go. Zooming out to the monthly, now we can note that, that's why 428 is so important. Yep, previous lows, back above these wicks here. And this is going to be the bottom. This is a good sign. It shows that there's progress being made here. Finally, we're going to look at 428 from our quarterly chart, which is now going to be, again, smoothing out those monthly candles to a more dominant pattern here. We can see that above roughly 428 to 430 means that we're taking out these relative lows back above the relative high at 428.78 and gives us potential, keyword being potential, to go higher. That is pretty much it. So now what I want to do is I want to have a look at some individual charts to see whether or not our leaders are still leading. And again, for me, that means Tesla, Apple, Google, Microsoft, who else? Amazon, those companies. And just before we do that, I also want to take a quick peek at BTC. So BTC having a very powerful day today. We can note that BTC on the daily is up by 5.4%. Making really good progress, still below the 50 daily and still below the 50 weekly. But again, not a bad day at all. 5% is great. I believe ETH was up by about 6%. 5.8, 5.9 as we're recording the video. And that's a really nice move. So risk assets are definitely advancing. And that's again, also due to the dollar going lower. But now let's look at some of these other weekly charts because it's easy for us to feel like we are in a period where we're going to be going straight up. But remember where we came from. We're still in fear. So markets generally bottom on fear, but is this enough fear? I don't know, right? I'm not sure. So now looking at QQQ here, we can note that we did print a lower low. Do we have a higher high? 329.9, 330.29. So we've engulfed last week's levels, right? Fully engulfed it. If your stock is not engulfed last week's range, what does it mean? It's underperforming S&P and it's underperforming the tech sector. So maybe it's going to lag on the way back up. For QQQ to make some nice progress higher, I would like to see it back above this pink line, which is a pivot. The pivot's going to be in reference to the anchored VWAP going back to the beginning of the year and the low that we staged in October of 2021. The low was 350.32. So after that, we're looking for the 50 weekly, and that's going to be at 362. Really good progress. That's what we can say. Good progress. Is it enough? We'll find out by Friday. There we go. Good start, though. Still technically pointing down as well. We can note that by, again, just drawing a downtrend and seeing that, yeah, it's still pointing down. It's pointing down there. It's pointing down here, but it's pretty close to a breakout. Again, meaning stop going down. Now we're going to look at Apple. And Apple here, over the 50, ready for more. It is back above 166, that key area I was watching. It stopped going down if it can hold this area. If it can bull pivot, maybe back to all-time highs, right? Warren Buffett loves the stock, said he wants to buy more. Tesla, let's have a look at Tesla now. Whoop, here we go. Bounce off the 50 MA on the weekly. And the classic 20 to 30% dip and closer to the 30 means it's a stronger buy. Boom, right? 27% down, and now we are up by 15. Very close to reclaiming the gap area back to October of 2021. The low here is 944, and it is claimed. So this looks really good, right? Apple and Tesla both still look like leaders. Let's look across the, we looked at Bitcoin and Ethereum, they look good, but they're not above their averages. So, right, still some work to do on those ones. Bill, let's look at Bill Microsoft. Oh, Bill stop, go down. Can he now go up? Let's adjust it here, and actually looks a lot more constructive than even like last week when we were hugging that 270 really close. So really nice push, really nice volume last week, and pretty close to its 50 MA. Stock still looks pretty fantastic. GOOG. Not quite a higher high, but really close, right within $3 on a $2,500 stock. That's pretty close. Red volume flush out last week. Has more work to do. Missed on earnings, but it doesn't look bad. It's up by 6.6 on the week. Amazon, struggling for its 200 weekly, and it's got a lot of work to do, right? It's got a lot of work to do. Right? It's got a lot of work to do, but it's nice to see that it's up. Let's look at NVDA next. NVIDIA. Oh, NVIDIA stop, go down. Can it now go up? Potentially. It's engulfed all of last week's all of last week's range. Didn't print a lower low though. Really close, within $1, 182 versus 183. And just noting here that getting back above 210 does take out the relative lows and does give us a little bit more margin of safety. The 50 weekly is pretty close at about 234, or roughly 10% higher from today's closing price. And then Facebook, forming a W, bounced off the green line, which goes back to our previous range here, right? Just eyeballing it, roughly 163, and looks pretty good, right? Continuation, stopped going down. It now has a 2-week uptrend if it holds, and getting back above 240 means like maybe it's going to start adding some juice back to SPY. So with that said, that is the market summary. What I want to go back to now is just leave you with some thoughts, and the reason why is because during the period of, again, looking back to the Fed here, looking at March 15, 16, and then looking at May 3 and 4, it was very hard to call the price action. Again, I was calling out for 3 white soldiers, which we got, right? We got them. Ultimately, we did print a lower low, though. So now what you have to ask yourself is, were there levels that I had in mind that I wanted to trim some stock on? Again, maybe Apple 165, maybe Tesla 950, whatever it is. If you had, again, you're hoping and praying on Monday that, oh my God, if we can only go back to this price, I'm going to sell some, I'm going to trim some. And now those levels are hit and you move the goalpost. All that means is that you're probably going to get hurt. If you said that if we go back to this price and the level hits, and then it did, and you're not taking some risk off the table, you are going to get hurt. It's just a matter of when. The market will humble you. And now what we're realizing is that it's very important to be prepared for the up, down, or flat. The rule of thumb is that volatility is a trader's paradise and an investor's hell. So you have to ask yourself, do I want to be an investor or do I want to be a trader? Because if you want to be a trader, this period right here had some tremendous gains. And as long as these lows hold, again, until we stop going up on the daily chart, we have some room to move. The low for today is 4137. So we can move all the way down to 414 or 415, and that would be a higher low. If you're going to trade, or investing, are you ready to hold on to back to here and then letting it actually print lower, 412, to confirm you're wrong with a daily lower low? That would also happen to correspond with a monthly level on SPY. Where did we close out last month? 411.21. Again, it's going to be retesting the monthly low. Are you going to be a buyer or a seller there? Or are you going to wait until we have another day, meaning Friday, to buy the other daily higher low? And if this pattern doesn't set up, are you going to fold at the first sign of weakness? That's a big question. If you are a trader, the daily chart is going to be your friend. If you are trying to invest, the weekly chart will be your friend. And what we don't know for sure is whether or not the market's going to readjust and reprice overnight. 75 basis points is off the table, but the total hikes we're going to be seeing between now and end of the year have not changed. So nothing has materially changed. This is relief. For it to be more than relief, we have to get above 432. QQQ is now out of that bear market territory, but S&P is still hanging out in correction territory. So we have to see some progress higher because we know that sell in May and go away is a real thing. And we've got the whole summer to go through this. So we get May, June, July, and those are going to be tough months. Every 30 days-ish, every 6 weeks between now and end of July, we're going to be getting 50 basis point hike. And the market is going to move on data. And we got payroll Friday and unemployment on Friday as well. So with that said, I really encourage you to make a plan for what if we do keep going up? Am I going to flip long? Am I just going to hold on to what I have? Do I want to be a trader? Do I want to be an investor? And if we do move down, again, am I prepared for it? Do I want to trade that side? For me personally, I would not go short unless we are below the previous monthly low at 411. Why? Because that's where we can set a very easy stop. And if you want to go bullish and we backtest that area, please just know like where you want to stop out. With that said, what I want to ask you for in the comment section is whether or not we believe what the Fed did and whether or not this rally is going to hold. So if you believe it, drop me a comment and tell me so. If you don't, please make sure to also tell me. Thank you for watching, and I look forward to seeing you tomorrow.